Hello dear friends, today is Friday, December 27. Let's look at the charts for the euro and the pound sterling and try to make some predictions. As we can see, the euro spent the first half of the previous trading day moving sideways. Later in the day, however, the euro gained some strength following the release of better than expected initial jobless claims data from the United States. Despite this, the euro dollar failed to consolidate above 1.0413. Today, the price has fallen back below this level, signaling a continued move with a sideways range. Moreover, it seems like the euro will remain range-bound throughout the year end. As for the pound sterling, Burrs attempted to push the price lower and break below the support level of 1.2515, but its false breakout generated a buy signal. Nevertheless, the British currency struggled to gain strong upside momentum, indicating an intact bear market. The pound-dollar pair is likely to remain under the control of sellers, particularly given the light macroeconomic calendar. Speaking of important news related to today, there are none to focus on from the euro area. In light of this, the euro is expected to keep moving in a tight range, showing no significant price moves. While data on the US goods trade balance and wholesale inventories will be released, these reports are unlikely to significantly influence market sentiment, especially as the week and the year draw to close. Now let's move on to technical analysis. The EUR USD chart shows that the level of 1.0413 acts as the middle of the sideways range. A false breakout at this level will generate a sell signal, dragging the euro down to 1.0380, where buyers are expected to take the lead. If the price breaks through and fixes below this level, the European currency will likely extend losses to 1.0347. At this mark, I recommend going long on a rebound in anticipation of an intraday correction of 30-35 pips. Long positions at 1.0380 can only be considered on a false breakout. Going long will also be relevant if the price breaks through 1.0413 and consolidates above this level. In this case, the euro is likely to rise to 1.0447 and 0476. At this level, it would be wise to go short on the rebound, expecting an intraday correction of 25-30 pips. Short positions at 1.0446 and 1.0413 can be opened in case of a false breakout. Speaking of the British pound, the situation is similar. A decline followed by a false breakout at 1.2503 will generate a strong buy signal, with sterling climbing to 1.2536. If the price breaks through and consolidates above this level, the pound-dollar pair will extend gains to 25.71 and probably 1.2611. At this mark, traders are advised to go short on the rebound in anticipation of a 30-35 pip move. Short positions at 25.71 and 25.36 can only be opened at a false breakout. The target for Burrs will be to break through 25.03 and push the price below the 1-month low of 1.2478. However, such a steep decline is unlikely. At the level of 24.78, I recommend going long on a rebound to catch an intraday correction of 20-25 pips. Good luck to all, wishing you profitable trading.